You're listening to Astonishing Healthcare, the podcast hosted by Capital RX, focusing on the biggest issues affecting healthcare consumers, benefits plan sponsors, and health plans. We're covering the inside baseball on how things truly work, or don't, in the U.S. healthcare system and pharmaceutical supply chain in an astonishingly efficient way.
Hello, and thanks for listening to Astonishing Healthcare. This is Justin Vanieri, your host and Director of Communications at Capital RX. And today, Jonathan Palmer, Senior Equity Research Analyst and Team Lead at Bloomberg Intelligence, is joining me in the studio. I'm excited to have a discussion about the markets and what's going on, especially to start 2025 here, as things have been pretty interesting. Jonathan, thanks for joining me today.
Yeah, it's a pleasure to be here. Thanks for having me.
So tell us a little bit about what you do and what your team does at Bloomberg to frame things up.
Yeah, sure. So maybe by way of background, I got started in the healthcare industry, more than 20 years ago at a drug company, Pfizer. And then after about 5 years, made the jump into healthcare-focused financial services at a small boutique investment bank focused on equity research. And in that equity research world, we delineate between like the buy side and the sell side. So the sell side are the investment banks who are selling their service, and the buy side are the customers who are consuming those services. So you could think about the mutual funds like a Fidelity or a Capital Group, or maybe some of the big hedge funds like Millennium or Point72. Those are the customers for equity research. And so I had a pretty varied career on the sell side, moving from a boutique bank into an asset management shop and then back to the sell side. And a little over 10 years ago in 2014, I joined Bloomberg Intelligence Group, which at the time was about 5 years old. And it's an interesting background. You know, Bloomberg was founded in the 80s as a data company, and their terminal product is synonymous with financial markets. There's about 300,000 of those Bloomberg terminals globally being used for a whole host of things that I don't even understand at this point. But they built a research group in 2009. And originally that was seen as almost like a marketing play for the data that sits on the Bloomberg terminal. So let's get some smart people who know companies and industries, and they'll write industry research about some of the data that's sitting on the Bloomberg terminal. And they were going along for a little while doing that. And then Mike Bloomberg, the founder of Bloomberg and former mayor of New York City, when his term ended, he came back as CEO in 2013, and he asked his management team, what are some of the growth initiatives on the table? And one of the things that was pitched to him was, well, there's a lot of dislocation in the world of research. There's regulations coming around MiFID, bigger banks exiting research. Some of the boutiques had failed. And so they really saw an opportunity to provide maybe a little bit differentiated sort of research product. And so with that, Bloomberg's a private company and does things maybe a little bit differently. And Mike said, that's great. Why don't we invest in that? What are your plans? And they said, well, we want to hire maybe 100 people over the next 3 years. We've got 75 people. Let's maybe get it to 200 over 3 years. And he said, why don't we hire 200 people in the next 6 months to a year? And so that's how I came on board. I was part of that big wave of hiring in 2014. And what happened then is we also switched the focus of our product. And so previously, it had been really focused on high-level industry research. But really, our clients, the Bloomberg's clients, aren't really focused on industries. They're focused on individual stocks and bonds or commodities. You kind of name it. And so we really dove into doing deeper research along those lines. And so today we have about 500 analysts globally, cover 200 companies. We look at credit, strategy, commodities. We do functional research around areas like tax or antitrust or policy, which is a big one for healthcare.
Sure.
Same with litigation. And so we're a little bit different than traditional research providers in that we're not an investment bank. We don't have the conflicts of a trading arm. We don't have the conflicts of an investment bank that's trying to do deals. We really look at ourselves as almost like a sell-side light, doing really thought-provoking independent research in the marketplace. And so I've been there about 10 years. And in that time, I've focused on everything. I used to work in pharma. I used to be a MedTech analyst on the sell side. On the buy side, I looked at everything that wasn't therapeutics. But today, my focus is really around healthcare services and also do a little bit of life science technology and diagnostics.
And you're in a good spot because of all those terminals, because of all the data, and because of all the journalists, right? You have the ability to pull everything together. Is that kind of the concept behind the research you're doing? Or
yeah, the way our team adds value to Bloomberg and our clients is through a whole host of different metrics or ways. And so I think the simplest way is to think about we provide research and commentary about companies and industries. And that's, probably our day-to-day job. we also kind of work as an internal consultant for the organization at large. And so you mentioned there's a big media arm at Bloomberg, whether it's reporters or TV or radio.
Hmm.
We help those folks get smarter when they're interviewing a CEO. They use us as sources for stories. And then within the Bloomberg architecture, if you think about that terminal product, which has a whole host of different functions for investment professionals, we're a sounding board for those folks who are developing those new products and functionalities because we've sat in a lot of those seats. We've sat in the investment banks or we've sat on the investment side. And so the way we add value is maybe a little bit different than just the narrow research focus an equity analyst might have at an investment bank.
Makes sense. So this year, new administration, what are the biggest drivers of the volatility we've seen to start the year and for healthcare stocks right now? Tell us a little bit about what's going on. Is it all Washington, D.C., health policy? Is there risk appetite? Or is there something else driving markets
Well,
these days?
I think you hit the nail on the head. I think it really revolves around DC. And when I say that, it's really more about uncertainty. Investors don't love ambiguity, and there's a lot of that these days. And I think the trade and tariff discussions that we're seeing right now are kind of the perfect example of that. It seems like every other day the messaging is changing, from what countries might be hit by what tariffs and the scope of those tariffs. I think it's really difficult for investors to have a view and place a bet when the playing field is constantly changing. And so I think the trade example is maybe the highest profile one, but it's not just trade when we think about what's happening in Washington. And healthcare wasn't really a big part of the Trump campaign, but we now have RFK at HHS, we have Oz at CMS, we have a new head of FDA. And there's a lot of unknowns in terms of how those folks are going to proceed and whether it's going to be business as usual or wholesale change. And I think that uncertainty has put a lot of money on the sidelines and a lot of people, focused on putting bets into safe havens, if you will, versus areas where they don't know what the outcome might be 6 months from now, a year from now. I think it's easy to say this is a broader discussion than just healthcare, but it feels pretty acute in healthcare right now.
Yeah, I agree. And we almost saw some pretty meaningful reform in the PBM space at the end of the year, but it got stripped out of the bill. So we're hopefully see that come back, the delinking and the drug price indices and things
Right.
along those lines. So given that level of uncertainty, it sounds like the risk appetite's low. How receptive would you say the capital markets are to health tech right now within the whole pie of healthcare?
It's an interesting question. I think the reception to health tech is actually better than it's been in years. If we think about the wave of companies that came public in that 2021 timeframe, there were a lot of interesting tech-enabled healthcare services that went public, either via an IPO or a SPAC. And there was also a ton of money put into privates at pretty lofty post-money valuations. And so if we think back to that time, money was easy. The idea that tech-enabled healthcare was going to really change the world in the middle of the pandemic, was at the forefront of a lot of people's minds and very investable thesis. And I think the reality turned out to be a little bit different, and that tech-enabled, while a very good story, where the rubber met the road from a business application and profitability of those companies, there was still something that needed to be done. And so I think we've had a little bit of a wholesale reset on that front. If we think about a lot of those companies that came public, many of those have failed. On the private side, we've seen a bunch of down rounds. And some of the companies that are potentially looking to come public in the near term, whether it's this year or next year, it's most likely going to be below the high watermark that they had from a post-money valuation perspective.
So if there's a little bit of a brighter light on health tech within the sector, what's the feedback like, or what's the IPO activity like? I think I saw the first SPAC deal I've seen in healthcare in quite a while the other day. Can you give us a little bit of an update on the capital market side of things?
Sure. There's a lot of companies waiting in the wings to go public. You mentioned that SPAC deal. I mean, we recently saw Hinge Health file an S1 here. I think that's going to be a little bit of the canary in the coal mine. We'll see how that one does. And then we'll go from there. But there's a whole host of healthcare tech-enabled unicorns that are sitting on the sidelines that could be public companies, I think, if they wanted to be. They have the scale, they have the revenues, they have the growth, they have a clear pathway to profitability. I think if we think about our 2020, 2021 hat, a lot of VCs probably weren't talking about unit economics and how you get to profitability. There's a clear appetite that you have to be able to show that you could be a profitable company going forward and get to break even or EBITDA positive, whatever the right metric is for the specific company. At least maybe not right out of the gate from coming public, but in a reasonable time frame. And so I think the Hinge one is a great example of testing the markets, and we'll see where that goes. And I'm sure there's a whole host of other companies that are out there who also would like to go public should that window open up.
Thinking back to like the pandemic, 2020, 2021, rates were so low. Thus, your comment that money was cheap. It was basically pretty close to free. Do you think we need to see rates come back in a little bit from here? Or how do interest rates play into this equation?
Yeah, I don't think the IPO markets operate in a vacuum, and the rate discussion's a good one. I think the appetite's there to see some new assets come public. I don't know that the rates are necessarily going to be the biggest hurdle for those companies coming public. A lot of these VCs have been sitting on some of these investments for a number of years now and are looking for an exit before they do their next fund. So I think there's an appetite there. And we've seen a lot of crossovers, and we've seen some things get done that, to me, point to the window being a little bit more robust than maybe we thought it was going to be a year ago.
Cool. And you run a podcast too, Vanguards of Healthcare. Thanks for having AJ on recently. We appreciate that. I'm curious, what's your favorite thing about interviewing healthcare leaders? And a second part to this question, what's one of your favorite recent episodes and why?
Well, thank you for mentioning the Vanguards of Healthcare podcast. And we started that about 2 years ago. And the genesis of it was our colleagues on the tech side of our business run one called Tech Disruptors. The only difference is that we really only focus on CEO and founders. The reason for that is that we want to talk to those leaders who are really driving change in the industry and have a very strong view of where the industry can go and how to get there. And so with that in mind, I'm a healthcare junkie. I could talk about healthcare and different facets of it till the cows come home. My dad was a pharmaceutical exec, and I grew up in northern New Jersey where everywhere you turn, there was a large pharma company right around the corner or a medical device company. And so healthcare has kind of always been part of the dinner table conversation for me. And having worked in pharma, done MedTech, tools, services, I sit on the board of a small biotech. I like to get in the weeds. And so the best way to get in the weeds is actually talking to the brilliant people who have started companies and are really trying to change the industry. And I really enjoy the private company CEOs. Public company CEOs tend to be very filtered with their messages. On the private side, the conversations tend to be a little less scripted. And I just seem to learn more in those conversations. So You asked which are some of my favorite episodes. I mean, obviously I have to say AJ, your CEO and founder from Capital RX is one of the ones that's near and dear to my heart. But
well, I had to say, A, the plug, but B, I need to link that in the show notes, of course, along with some other materials people might like. But go ahead.
But in all seriousness, I personally tend to like the episodes where the company is in a sector that I've done some work on in the past or done a fair amount of work in my career. And so for me, Capital RX actually fits that pretty well because I cover public company pharmacies and PBMs, and that's right in my sweet spot from a discussion standpoint. Along that same vein, I also do a fair amount of work in life science technology and genomics. And so one of the ones that I really liked and enjoyed was an episode with Tempus AI, where the discussion was really around how genomics and how AI can transform genomics and how we're treating cancer. That one's great. And then one other one I'll maybe mention just to round it out at 3 is, in addition to sitting down with public and private company CEOs, we also sit down with the managing partners of venture capital firms. And they have an interesting lens too, because they're really making those early investments in the companies that I, as an equity analyst, will ultimately see go into the public markets through an IPO or get bought by one of the incumbents down the road. And so hearing what they're seeing at the early stage and where they're placing their bets is fascinating to me as well, because I see a lot of those things come out the other end of the funnel a couple years later, if you will. And so one of the ones that I really enjoyed is we had Lynn Chu O'Keefe, who's the founder of Define Ventures, on in the fall. And that's probably my favorite VC episode that we've done so far.
Nice. I love those discussions where you learn something, you learn it early on. And then for me, just because I was always moving so fast with the things we were covering in my old life on Wall Street, I would forget. And then I would see something like 9 months later or a year and a half later. I'm like, oh yeah. And I have really great notes from that discussion. And wow, look at where they've come. It's really cool to see.
Yeah, I couldn't agree more. I mean, the early view is, I think, invaluable. I mean, there's a selection bias in public markets where I play. These are companies that have gotten to scale, that are, for the most part, profitable. They have cash flows. Healthcare is a pretty healthy defensive business once you get up and running. And so the early stage piece where not everybody's going to make it, and the VCs have to have a thesis around where the market is going, and understanding what's driving that thesis is pretty fascinating.
Yeah, the defensiveness of healthcare probably helps right about now quite a bit. People need healthcare, so it's kind of like an inelastic curve there. And B, there's a lot of good things going on. So I'm excited too to see how Hinge does. And hopefully the appetite changes, or the willingness of people to back some of these companies, because there's a lot of folks doing exciting things out there. And it's funny, growing up in North Jersey as well, I vividly remember seeing all the big buildings. I'm like, what are those?
Hmm.
And it's
Exactly.
it's the J&Js, it's
Right. The Mercks,
yep.
the companies that are all part of Novartis or Sanofi now.
Yep. Yep. So, what couple of trends are you or are institutional investors watching most closely for the rest of the year and for 2026?
Yeah, it's a good question. Our group and my team does a whole bunch of year ahead outlooks to start the year. And so we touched on this a little bit earlier, but I think the overarching theme right now is what's going to happen on the policy front. I think that's where the greatest unknown is, to be honest with you. And we mentioned, whether that's FDA, FTC, DOJ, CMS, all the acronyms, what's going to happen in each of those departments. And so that's where we're spending a lot of our time trying to answer some of these questions of what is the ultimate downstream impact to those who play in those markets. Thinking about sector specific things that are on the top of our mind. In pharma, the GLP-1 craze is continuing. There's a lot of work being done around the follow-ons, whether it's oral, the new indications, all that sort of great stuff on the innovation front. Also in oncology, there's a bunch of interesting readouts happening this year. So that kind of really covers the biopharma sphere. In MedTech, the stories are really around product innovation. And there's a whole host of things that are really interesting, whether that's cardioablation or the ever-changing insulin delivery market. And, particularly these days, there's a lot of focus on robotics,
Mhm.
surgical robotics across the sector. But there's also some concerns around capital spending in that sector, whether that's in the US on the provider side or even globally in places like China, which has been a big growth engine for a lot of product companies in healthcare. So rounding out the rest of the sector views in tools, we're watching what's happening with pharma spending patterns. That market has seen a slowdown from things like the IRA causing pharma to rebalance their budgets and maybe reprioritize product and spending. There's also been a trend in bioproduction, and that's the equipment and services for manufacturing biologics. And that marketplace had a huge swing upwards with the pandemic and all the vaccine production. And that's been repurposed now into other modalities, but that recovery has taken longer than expected. And so last but not least, the healthcare services world where you guys play. This encompasses a lot of different subsectors. And so a couple things we're watching in pharmacy, we're really paying attention to how the adoption of new pricing models is going to play out. Whether that's on the pharmacy side or the PBM side. We're acutely aware of the shuttering of retail stores, whether it's Walgreens or CVS. And we're really looking at the online trends that are happening as well. I think Amazon's not a big player in pharmacy, but I think if you ask me this question in 10, 20 years, they will be. Across the managed care space, the hot topic has been utilization in Medicare Advantage. There was a lot of angst last year for those players as utilization ticked higher and MLRs just skyrocketed.
Mhm.
So we're really watching what's happening in MA and in terms of enrollment trends. And then within the tech-enabled services, we talked about the IPO window, and there's companies waiting in the wings to go public. So we're just going to see how that kind of plays out, because I think we're, after maybe a couple of years where investors weren't that interested in those stories and those companies, it seems like the tide has turned, and now we have some new assets coming to market. It might be a good time to start looking at those stories again.
That's an amazing overview. Thank you, Jonathan. I would love to link one or two of those reports in the show notes for listeners as well.
We'd be happy to send that your way.
Excellent. All right. And here we are. Thanks so much for spending the time with us today. Last question I ask everybody, and I'm sure you've seen a ton over the years. Make sure it's a compliant one, but what's the most astonishing or surprising thing you've seen through the years as you've covered the healthcare space?
That's a tough one. I'd be loath to point to one specific example, but I'd say having followed the industry and particularly the public markets now for about 20 years, nothing really surprises me on that front at this juncture. I think anything that can happen under the sun kind of does at some point in time. But I say the one thing that always strikes me is that I'm always surprised at some of the deals that get done in this space that leave me scratching my head either on the strategic rationale or on the financial side, wondering why this deal got done and who on the board voted that this was a good idea. And there's probably a graveyard full of those examples. And there's a couple in that tech-enabled healthcare space where people vastly overpaid for assets. There's deals that somebody wants to add a third leg to the stool in a business that they've never been in before, so they buy it. And then a year later, they're shutting it down. And you're just going, oh my God, how did this? I could have told you that's not a good idea. But nothing really surprises me at this juncture anymore. Anything that can happen will. And I think that's what actually makes the job really interesting from where I sit. There's always something new, whether it's on the innovation front or the business model front, that keeps it fresh and keeps you on your toes. And so I love healthcare, and I think it's the most interesting sector to follow. Obviously, we're biased here, sitting where we do.
Yep.
But it's been an excellent run, and I'm looking forward to see what happens the next 5 to 10 years in healthcare. And I know even though I might prognosticate that I think this is going to happen or that's going to happen, the road is pretty windy, and we'll see where we wind up.
Agreed. Yeah. And being an information junkie and healthcare enthusiast myself, I'd love to have you back on. Thanks so much for joining us today.
Thank you so much for having me. It's been a pleasure, Justin.
Thank you for listening to Astonishing Healthcare by Capital RX. Head over to cap-rx.com/insights and visit the podcast section for show notes and other relevant content. If you liked this episode, be sure to subscribe so you don't miss the next one. And definitely share the link to the show with your network if you enjoyed it. Have a great rest of your day.